Hi, everyone. Today, let's talk a little bit more about Palantir. First, I'll talk about Citron Research as saying that Palantir stock is no longer being valued as a stock, but it's acting as a full casino as it surged more than 300% since its public offering. If you haven't been following Palantir, definitely check out my first video, which is linked in the description and I will link it above. And that's a much more in-depth analysis of Palantir stock as well as some of the price action. Then I want to talk about some of the potential outcomes of short sellers piling on the stock. I will also go over a little bit of the price action and a result of their announcement. Then I will talk about my trade and how I see it going in the remaining 13 days. If you like trading stocks, following the markets, and making money, definitely like and subscribe. Welcome to the Portfolio Bulletin. Let's get started. So as I mentioned before, Citron Research said Palantir stock is basically way overvalued, and they are starting to short sell the stock. They announced the short sell on Twitter, which is a little bit strange, but I guess that's probably where most people are finding out about this stock. But they are basically looking for more short exposure with the intent of riding that retracement. Whether it be coincidental or as a result of the Citron announcement, Palantir did retrace 33% after its massive rally. And Citron did put a price target of $20 per share by the end of the year. The announcement came after a pretty strong morning rally, then resulted in a loss of 10% to intraday lows. The stock paired some of those losses, resulting in around a 4% lower close. Not really part of the story here, but they did mention the fact that because Joe Biden is currently predicted to be the 2020 presidential election winner, his new administration would likely cut military spending, which could push the Department of Defense to move more business over to Palantir because their products are a little bit lower priced than traditional providers. So Citron is piling on the stock, and let's see what the result of that could be. So short selling is pretty straightforward. They are selling shares that they don't own in order to purchase them back for a lesser price. And if demand for short selling goes up, then it could drive the price of the stock down overall. But this does put them in a little bit of a precarious situation. If short sellers do not pile on and they cannot overpower the buyers, then they are pushed into a position called a short squeeze, where they are forced to buy back their positions for a more expensive price, which would result in a loss on that position, which then drives the stock price up faster. This cycle tends to feed on itself and create some pretty massive spikes. And the most recent example of this was on Tesla. The tweet that Citron put out was right around 9 o'clock Eastern Standard Time, so just before market open. We had a little bit of a gap up on the final day of the week here. We ran up right at the beginning of the markets, and then we quickly retreated, supposedly as a result of that tweet. It could just be the fact that the run-up has so far been pretty dramatic. If you zoom out here, it's been enormous. As I mentioned, already over 300%. But zooming back in here, you can see it was a fairly dramatic drop back down to some reasonable price here, all the way down to just below $26.50 per share. And it bounced back up to around $28 per share. And after hours, it settled just below $28 per share. Anytime you see a massive gap up here from the moving averages, it seems like this would be unsustainable by nearly any stock. And this little tweet could be a catalyst for a quick drop, or maybe even a further drop down back to the moving averages. But it could just be a catalyst for this drop. It doesn't mean this stock is not going to run again. It could just be the fact that this was a little bit unsustainable and a little bit of a catalyst sent it down a little bit. We'll have a little bit of a retrace, and then we could be off to the races here, back up to all-time highs. My current price target is $28 per share by 11 December. I think it could be over that price. Whether it is sustainable or not remains to be seen. But at $28 a share right now, at least in the short term, I think it is a sell. And looking at my specific position, I did buy the call at $23 and sell the put at $23. So this is essentially a long stock position. And I also sold the $28 call just to give myself a little bit of a downside risk, putting my break even at $21.50 and my max profit here at $28. But if you do the math here, you can see my max profit at expiration is $649. Despite the fact that this spread is only 5 points wide, which means I'm effectively selling this stock at $29.50, despite the fact that the stock only needs to make it to $28 for me to realize that profit. If I didn't have this position already on, I'd probably be looking to wheel this stock somewhere around the $20 to $22 price range. So you could look to sell these puts cash secured, or if you don't have the capital to do that, you could look at a put credit spread. The implied volatility here is still very high at 99 with an implied volatility rank of 81. And anything over 30 is considered high, so implied volatility here for option selling is still very good. But over the long term, I'm still pretty bullish on this stock. And if you want to know the reasons for that, again, check out my previous Palantir video. Comment down below what you thought of this video. Are you still bullish on Palantir, or do you think the shorts are going to come in and crush this stock? Definitely like and subscribe if you got any value out of this video. I consistently make videos about my long-term buy and hold positions or random economic news that is affecting the markets. And of course, stock analysis. None of this is financial advice. This is all for entertainment purposes. And have a great day.